Scott Bauer of Trading Advantage joins me now for the Trader Rundown, and what a day we have going here post-Fed. So great to have you on the show.
Great to be here.
So what do you think the trade is now that we have a tiny bit more clarity from the Fed?
Yeah, and tiny may be an over-exaggeration, right? The Fed obviously is not doing anything June, July. In fact, the percentage after Yellen spoke yesterday of a September rate hike dropped all the way down to about 20% now.
Ooh.
And now December is about 44%. So, I don't think anything is much different today, and all eyes now are going to be on the Brexit vote next week. That is really what the market is going to be preparing itself for.
You're watching the bond market. So
Absolutely.
What is the bond play here?
The bond market moved lockstep with Yellen yesterday. TLT ticked up a little bit, and TLT is the 20-year ETF, which measures interest rates on the 20-year. So as interest rates go down in just like regular bonds, the value of TLT or any bond goes up, and the market ticked up a little bit because any interest rate play is off the table, at least in the near future here. So I am still looking for a rate raise, and I'm still betting September rather than December, even though those odds came down yesterday.
Okay, so are you shorting here, or what would you do?
In TLT specifically, and I like TLT, Angie, because it's extremely liquid. So option markets are very tight. Anybody can get in and out at any time. So I'm actually buying some put spreads in September, some very inexpensive put spreads down around the 132 strike, so like the 132, 127, maybe even like the 130, 125. Because I don't want to say betting, it's not a bet, but I'm saying that rates are going to rise by September, in which, if that happens, the value of TLT would come down.
And you also have what I like to call a Rambo trade. These are highly speculative trades.
Modified Rambo in this case.
Well, you're managing your risk. That
Exactly.
is true. But it's not for the squeamish. These are tough trades, and it's really what we call speculative money down here. So Sarepta is a drug company
Yes.
that we've seen shoot up, fall down, tumbles hard, goes up fast. And what would be your trade here?
The reason I like this one is because the reward to risk is so great, and the risk is not very big in this one. I'm looking out at July options, and I'm looking to buy like the 25-30 call spread, 24-29, somewhere in that range there for about 50 to 60 cents. So that's my risk. I mean, if the stock falls further out of the bed or it doesn't go up from here, I know my risk. But if something does come out, and this is purely, like Angie said, it's a speculative trade, it is not a technical trade whatsoever, but if something does come out, which we've seen, every 2 or 3 weeks, this stock fluctuating up and down, this has pretty big reward to it.
And it might go up. So this is a trade you've been in for a while now, because I know you talked about this on the show before.
Yes, I've been in and out. When the stock has hit the 17, 18 level, I've been back in with call spreads. When it's, risen on whatever news to the 23, 24 level, I've exited. Well, now we're not quite down to 18 yet, but we're trading, closer down there. So that's why I'm looking to get into that particular spread.
It has become a trading vehicle for Scott.
You know what? It's not a bad one, again, because the risk is so limited, right? I like my reward opportunity given the limited risk I have.
Good to have you on the show. Thank you.
Always a pleasure.